Hey, it's Dr. Kate Walker. Welcome to Scary Stories About Money because it's October and that's spooky, and that's what we do here. We talk about scary stories, but don't worry because I always give you a solution. So let me admit our guests who want to join live. And remember, Step It Up members, you get to attend live every Tuesday at noon. And what I'll do is I give the presentation and then wait till the end, turn the recording off, and then you can ask me your questions. We used to be able to live stream on this on Facebook, but Facebook said no to that. But you can still tag me with questions. So if you're in the Step It Up membership, just tag me if you watch this replay and you have questions about anything I'm going to talk about today, because yes, I am going to talk about the IRS. So hang on just one second. All right, we're good. Okay, so money can be kind of scary anyway. And so when I do this particular episode, and I try to do it every year, I'm very mindful that I'm looking into a camera and looking at myself, right? Because I guarantee you, any mistake you have made with your money, I have also made with my money, or lack of money, or paying a bill. And I'll never forget in college back in the 80s, ATM machines were like a thing, a new thing for me. I came from a small town. I came to Austin, Texas. I was like, holy moly, look at this machine. I put in my card, it gives me money. And I was super responsible. So I would check my balance, right? I thought that's all I really needed to do. Didn't realize that when I wrote a check for groceries, it might go in there and suck all the money out in the meantime. And so that's how past Kate learned about money, right? Bouncing many, many checks. And I know you guys who are listening to this or watching this probably don't know what a check is, but it was a thing. It was like an IOU you would give to the grocery store saying, I promise I have the money. And then it would be a lie because I would not. So, scary money stories when it comes to running your own business, that starts with you opening a separate business bank account. Now, I'm not going to go into depth about that. I've done lots of trainings on my soapbox where if you're going to open a business, you must maintain a separate business bank account. You must have that money that's coming from your clients or your course sales or your speaking gigs go into a business account, because that's where at the end of the year, when you're trying to get everything together for your taxes and you want to know, okay, was this a business expense that I can write off? Or was this related to my personal expenses that go into my household, right? And what is a write-off? A write-off is something you can deduct, an amount you can deduct so that your profit goes down. And not in the way like, oh, darn, I didn't make any money this year, but in the way like, oh, yay, now I have less money that will be taxed by the government. So it's kind of a game, right? You want to make sure you make lots and lots of money, or at least the money you're entitled to from the services you're delivering to your amazing clients in your amazing community. And at the same time, you want to make sure you're not being taxed for a reason that could have been prevented, right? But if you didn't know that all of your startup costs for opening your new practice could be a write-off. I mean, you may have spent $1,000 on office furniture. Wouldn't it be nice to be able to take that $1,000 and subtract it from your profit? So where it shows $10,000 of profit for the year, you could subtract $1,000 and now it's $9,000 that will be taxed at the end of the year. And in a second, I will show you how to find your tax bracket. If you're listening to this and you don't have the advantage of the screen, don't worry, because you know me, I will talk you through and walk you through whatever I do when I share my screen. So I told you in the blurb for this, or if you didn't see it, you will, especially when I turn this into your training and put it in your Step It Up profile, or I turn it into a podcast. I'm going to share a story, and this isn't a long ago Kate story. This is like 2 weeks ago Kate story. So I'm meeting with my accountant, and we look at all these numbers, and then I guess, I don't know, probably mid-August, I get a letter from the IRS, which happens. I mean, I get letters from the IRS all the time. it's usually it's no big deal. It has to do with like an address change or, this is your refund that we said you get now, but you really get this one because anyway, all the IRS math. Well, this one was a little bit different because this one said I owed about $4,000. And I was like, oh, I don't want to pay $4,000 for a thing. So I called my amazing accountant because, and I tell you guys, if you have an accountant that you can text or you can email or who can set aside time at short notice, get that person. And if you have a person with a teacher's heart who will help you understand things and not to sort of patronize you for your lack of mathing, get that person. I have that person, and I'm happy to share that name with you, not on the podcast or this, but if you want to tag me, I'm happy to share his name with you because he's amazing. So I reached out to my accountant. I was like, hey, I got this letter. He's like, no problem, put it in my mailbox. So I rode my bike down to his office, stuck that in his mailbox, made a meeting, sat down, and we're like, and he does his accounting math. So he's doing the thing, and he's like, there's $14,000 missing from what you paid 2 years ago before I had hired my current accountant. I was like, that's funny. So this is where the scary part starts, because when you have to call the IRS, it's kind of like calling an airport when it's hurricane season and they've just canceled your next flight and you're one of about 500 people standing in line to try to get a hotel or another flight later for that week. It's that intense because you're getting dropped, you're getting hung up on, you're getting a person who's super nice, and then in the middle of a sentence you lose them and then you can't get back to them, and then the next time you call maybe it's someone who's not so nice. So that took, I think, probably 3 or 4 hours just to spend a morning making sure I contacted a person. Now, is there a way for my accountant to do that? Yes. And the form is something that we can have signed together through DocuSign. And, he could definitely do this on my behalf, but then I would have had to pay him for that 4 hours instead of me. So here we are. So I was on the phone for 4 hours. Eventually got connected with an amazing IRS person with a teacher's heart. And again, anytime I say that, it's like, just don't make me feel dumb because I know I made a mistake here, right? Like, I know that. So I'm on the phone with this person. We are going over transaction by transaction by transaction because I knew I had made that payment. I knew that I had to have made that payment back in 2022 or 2023 or whenever it was. Y'all, I had not made that payment. And I found the email that said I had made the payment. Like, I literally thought, oh my gosh, I have found it. Here's the email. It says, yes, I have mailed the payment. But then I did Kate ADD thing, which is in the email, I immediately asked another question. So what is likely to have happened is that check never got written. That check never got mailed. Now, solution right off the bat, and I'm sure some of you are sitting there, you've already got this in your mind. I do not mail checks anymore. That long and short has solved so many of my problems. I only electronically do everything with the IRS. Now, I did not do that before because my accountants that I had before were old school. They didn't want to do anything electronically. So everything was mail and faxes and all the things, right? So good news, right? Because I always look for the good news. There's always a glass half full in all of this, right? First, glass half full was that I have these amazing people with teachers' hearts at the IRS and down the street as my accountant. And glass half full, number two, the check was never cashed, right? So I was able to at least go into my bank account and see that the $14,000 check had not been cashed somewhere, right? And of course, if I was great at balancing my bank account, my personal bank account, anyway, I could go on and on. So yeah, I was $14,000 short when I had paid, I think it was on my return 2 years ago. Folks, it happens. Mistakes get made. And thank goodness I've had enough therapy. I wasn't beating myself up. I wasn't telling myself what an idiot I am and all the things, right? I really, because I teach this stuff and I help people hopefully understand that groups like Texas Counselors Creating Badass Businesses and the Texas Supervisor Coalition are your warm, fuzzy blankets of nurturing, right? And there are no silly questions. And yeah, sometimes I have to take my own medicine because I make mistakes. So my scary money story wasn't so scary for a bunch of reasons. Number one, the kind people that I met. And number two, this is my segue. If you're a business owner and you do not have an emergency fund, this could be a problem, right? So I did not owe 14,000, but I owed a percentage of that because of some other things and write-offs and tax returns. And I had reorganized myself as an S Corp. Yay. So I was already saving so much money on my taxes. That was good news, right? I didn't owe 14,000. It was a percentage of that. But, or I should say, and I keep an emergency account. My husband and I took Dave Ramsey not once, but twice, and we keep an emergency fund for situations just like this, right? If it's not the IRS, then maybe it's our air conditioner breaking down, or we need 5 new tires on the RV because driving to El Paso from Lampasas, it takes toll on your tires. So we have an emergency fund. So a great solution, if you're listening to this, is to start an emergency fund. I mean, try to fund it. Dave Ramsey says, just try to start with $1,000, right? And put it someplace where you don't have easy access. My husband and I keep our emergency fund at the local bank, the little Lampasas bank down the street, that we don't even do electronic transfers or transactions. We can't even, I think I take that back. I think my husband can log in, but to get the money out, we have to go to the bank and we have to fill out a deposit slip and they have to give us a cashier's check. Like, we make it really hard on ourselves to access that emergency fund. Now, we don't put it into an investment, right? We don't make it so that it's that hard where we'd have to sell stock or something like that. We want it to be liquid enough. So it's definitely not in an interest-bearing account unless you call like 3% great interest. I wonder if it's even 3%. Anyway, doesn't matter. It's there for emergencies. Another solution is something that, as a business owner, if you have not done this, if you haven't started doing this, is to pay quarterly taxes, right? That's one of the reasons that I paid a percentage of that amount instead of the entire amount, because I pay quarterly taxes. Now, don't ask me how much I pay or why I pay that much, because that's too much math for me. I rely on my accountant, who tells me every year when I go to file my taxes, and even my former accountants, they would always give me, okay, this is what you need to pay on January 1st, September 15th, August 15th, October 15th for your quarterly taxes, Kate. And so that amount, that's just writing a check, or you know what I mean, e-filing with the IRS. And what can happen, because you don't know what you're going to make from year to year. And I want you to have a good year. You're amazing. You don't have to be a super marketer or a super blogger or a super podcaster. It's just the fact you're delivering excellent services and your community needs you. You're going to have some great financial years. And if you tune into me when I have the webinars in February and March, I always host a webinar with someone who can help you get your taxes together. So go listen to past podcasts or past training, Step It Uppers. I have the 2024 webinar with Dr. Olivia Waddell in your Step It Up profile. It's right there. You can take it today for 1 CE, for an asynchronous CE. That's on the podcast if you don't need the CE. The point is, educate yourself on how to get organized before tax season happens. Now, so an emergency account, quarterly taxes. Another solution is to make sure you understand your tax bracket. So what can happen sometimes is this can be a kind of a scary story. If you have a partner who makes a good income, right? Let's say that your partner is, they're a CEO of a company, or they own their own auto body shop, or they're a physician or something. They make a good salary, and you open your practice. Well, what can sometimes happen is the profit from your practice can bump you up into another higher tax bracket. Now, it's super easy to find your tax bracket. And yes, I am going to share my screen. So let me get a blank tab here. And I'm just going to go over here to tax bracket 20. Oh, look, you'd think a lot of people Google this, huh? It's the first thing that comes up, 2024. And the IRS will show you, but sometimes their website's a little bit, yeah, I'm going to find one that's a little more visually friendly. That's a little bit nicer. So here's what I'm looking at. If you are listening to me, I'm looking at a table, and on the far left side, it has tax rate, and under that is 10%, 12%, 22%, 24%, 32%, 35%, and 37%. And the next column is for single filers. It gives you a range, so a range of 0 to 11,600, or the next column is married individuals filing joint. And then the third column is heads of household. So what the ranges mean, I'm going to read left to right. You are taxed at 10% on the first $0 to whatever the range is on the right. So if I am a head of household, I will be taxed 10% on $0 all the way to $16,550. That is, and remember, that's profit. Like if I had $16,550 in write-offs, right, that would be zero. So, I'm not an accountant, but that's kind of cool. What happens though, if you are adding to your family income, is you can see here, if let's say you're married and you're filing a joint return and you make $201,000, $201,050, that means you are taxed at 10% for the first 23,200. You're taxed at 12% for dollars between 23,200 and 94,300. And you were taxed at 22% for 94,300 to $201,050. Okay, so that's called a graduated taxing system, and it's cool because this website actually has a little video you can watch, right? So it's not 22% on everything you earn, right? It's 10% for the first bit, 12% for the next bit over that, and then 22% for the next bit over that. Well, if you have a fabulous year, you may bump your family into this fourth tax bracket, which means anything you make over that puts your family over $201,050 will be taxed at 24%, right? So the first $201,050, you're still taxed at the old rate, right? Up to that point. But because you have now put your family over that amount, it's getting taxed at a higher rate. So I'm turning off the stop share. That's why it's so important that you have help when it comes to accounting, because like I said, it's kind of a game. It's like you want to make sure that you have a fabulous year, but you also want to make sure that you're not getting taxed at a super high rate because you had such a fabulous year, or because you have a supportive partner and you're adding to your family income, right? And we're not talking about like getting paid in cash and then not telling the government about it. No, we're going to keep everything on the up and up because that's who you are and that's what we do here. So that means you need to have someone who's well-versed in, you ready? how to structure your business, right? If you're an LLC, if you're a DBA, if you're a 501c3, or if you're like me and you're an S Corp, there are ways to take any profit that you make and put it, oh, I don't know, into a retirement plan or to make a purchase that's going to benefit your business, and it will decrease that income. I don't know what those are. That's why I have experts come and talk to us in our free webinars once a month, right? So tax season, I'll bring in a tax expert. Speaking of that, another mistake that can cost you money, business owners, is misclassifying your W-2 and your 1099 folk, right? So I have a W-2 employee, which means after a certain number of hours and a certain number of time, certain amount of time, I get to offer my employee retirement benefits, right? And that's something that the government keeps an eye on. So do I know this stuff? Heck no, I don't know this stuff. But I hire people who do. And I'm not just throwing around dollar bills. These are folks who they charge a reasonable amount to do a job that I really only need them to do once or twice a year. So it's not like I'm having to keep folks on retainer, but it is so worth it. And when I can find somebody who will talk to me for free, I do that too. And that's why the amazing Dr. Michael Flynn is coming in a few weeks. If you're listening to this, it may already have passed, but I can tell you I will have him again. He's going to be talking to anyone who wants to sign up October 24th at 5 p.m. about exactly how to classify your folks correctly, and then what to do next so you don't have a scary money story, right? I mean, losing a $14,000 check, that sucks. But not having it cashed, that's excellent. Having great people help me and work through it, excellent. Having an emergency fund set aside so I could get caught up, excellent, right? So take what I'm telling you that is scary, and I want you to focus on the solutions so that future you is going to thank you and say, oh my gosh, thank you so much for listening to that webinar. Thank you so much for getting that information. Thank you so much for putting things in place, because nobody expects you to be perfect, and you are too important to lose because you made mistakes with money. I mean, good Lord, if we quit every time we made a money mistake, I don't know. I'd have quit a long time ago, y'all. It is what it is. Thank you so much for watching. I'm going to turn the recording off and see if we have any questions.